Hi, I'm Sudhanshu Asthana. I'm EVP and Fund Manager in UTI Mutual Fund. Today we are here to talk about the launch of UTI Focused Equity Fund. It's a portfolio of concentrated hand-picked high conviction stocks, which we leverage our research expertise and a research framework to pick out and construct a 30 stock portfolio. The objective of this NFO is to create long-term wealth appreciation for our investors. The portfolio will handpick a few high conviction stocks. It will also invest across market capitalization and sectors so that it's optimally diverse. And the fact that it will be benchmark agnostic and have a high active share, it will have a distinct portfolio versus the broader indices and will have a potential to generate alpha. So the portfolio, the core part of the portfolio, a large part of the portfolio will invest in sustainable businesses. These are businesses which have got a long runway for growth. And these are also businesses which generate enough internal capital, by having higher return on capital employed to fund their growth capital. By growth capital, we mean working capital and capital expenditure for fixed assets. So these are the sustainable businesses around which we'll build a portfolio. To add to this, we'll have transformation opportunities. These are basically businesses, where if the business strategy is realigned, and we see that that is happening, the outcomes become sustainable. So we want to invest in these businesses for alpha generation. And the third part of the portfolio is that we'll add as and when opportunities available in companies where over a 4-5 year period, the averages show you sustainable outcomes, but there might be a few years in between where, these outcomes don't look sustainable. So we will buy these businesses when the valuation is attractive, and we will wait for mean reversion and valuations. So as the fund is concentrated, there might be shorter term volatility. So typically you should be investing for a longer term, and because in the longer term, 6-7 year period, the volatility basically reduces. So for longer term investors who have appetite for short term volatility can invest in this. So you should look at it, as a short-term high risk, but medium to long-term lower risk investment. So it's a typical equity taxation. Short-term taxation in India for equities is 15% plus surcharges. And for 1 year and above, it is long-term capital gain at 10% plus surcharge. So in summary, this portfolio is about our hand-picked high conviction stocks. It's a concentrated portfolio. Where we leverage our investment framework, the experience of the team, and the tools which are available with our research to identify these stocks. These stocks are then we try to invest across market capitalization and sectors, so it's optimally diversified. We also look at the fact that this portfolio is benchmark agnostic, and it also has a very high active share. Hence, it turns out to be a distinct portfolio. Versus the broad indices in the market, that leads to a potential that it can generate alpha. As you look at it, this is for investors who have appetite for short-term volatility. So typically people who invest in this should invest from a long-term. The NFO opens on 4th of August and the NFO closes on 18th of August. Happy investing, be safe. Thanks for all your support. Thank you very much.
In securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.